This is London Real. I am Brian Rose. My guest today is Peter Schiff, the economist, author, financial commentator, and podcast host. Your career began as a stockbroker in the early 90s, and you held positions at a number of major financial institutions before co-founding Euro-Pacific Capital. As the founder of Schiff Gold, you've been a staunch advocate of investors allocating 10 to 20% of their portfolios to physical precious metals as the safest hedge amid a collapsing world economy. You were one of the first expert forecasters to correctly predict the 2007 housing market collapse and subsequent 2008 financial crisis, making you one of the most sought-after commentators in the game. Your analysis and predictions are regularly featured on CNBC, CNN, Fox News, and publications from the Wall Street Journal to the Financial Times. You believe that we are now facing a worse financial collapse than 2008 and an inflation crisis that could last for another decade. Peter, welcome back to London Real.
Thanks, Brian, for having me back on. And by the way, I haven't been on CNBC for years, so you might want to scratch that network off your list. I used to be on quite often. Other networks, too, that stopped having me on were Bloomberg. I used to be on a lot. CNN doesn't have me on anymore, MSNBC. Fox News still has me on, Fox Business, so to their credit. And there's a lot of international news stations that have me on quite a bit, but, my hometown or the United States, I'm not welcome on most of the mainstream media.
Why is that, Peter?
I guess I got too many things right. They got tired of being made fun of, because people would put up clips of me saying stuff and everybody else getting it wrong and me getting it right. And I guess it's kind of embarrassing. But I don't really know, because I know I'm a good guest. And a lot of these networks that stopped inviting me on used to tell me how much they liked having me on and how, their ratings would always pick up. In fact, when they knew that, people were looking at their ratings, they would go out of the way to make sure I was there, because they knew that whenever I was there, I would bump up the numbers. In fact, a lot of people used to come up to me, when I was on CNBC a lot, and they said, the only time I even turn up the volume on CNBC is if I see you there. So I know I'm a good guest. I have a good sense of humor. So and I have a quick mind when it comes to these soundbite discussions. So I think it's a lot of politics involved. Maybe the advertisers didn't like me because I was criticizing some of the products they were pushing. I didn't have the mainstream view. I think most of the guests that come on these networks share the same opinion. I mean, they may have slight differences on the margin, but you rarely get somebody that's really outside the mainstream.
Yeah. I mean, I've had this discussion quite a lot with, say Max Kaiser back in the day, who said, look, they always bring on the military. They never say anything bad about their pharmaceutical advertisers. Like, there's a lot of compromised media on these channels. And maybe you don't fit into that nice little mold. So maybe that's why they ditched you.
Yeah, I mean, they had me on. I mean, for years, they called me Dr. Doom on CNBC when I was forecasting the collapse of the housing market and the financial crisis in 2008. So at least they let me come on, and then they would make fun of me. I was almost like comic relief, because everybody else would laugh when I was coming on making these forecasts. And then after everything came true, they briefly, gave me credit, and then they all of a sudden really, stopped inviting me on.
Well, thank God for independent media. That's for sure. You don't need them.
Right. And now I've got, my own podcast, which I didn't have back then. In fact, I think I have more regular listeners to my podcast than CNBC has viewers. So I think I'm reaching a larger audience on my own. And then I go on podcasts. I've been on the Joe Rogan podcast 4 times, and I actually got to reach out, and I'm going. I've been a while. I got to go on a show again, but you had me on. I got a lot of views on some of your videos, and so I could get the message out there. You no longer have these mainstream media outlets that are the gatekeepers. There are enough independent channels on the internet that are willing to have me on, and now they have a large enough audience that the message gets out there.
Yeah, independent media obviously is something we've been doing for 11 years. We had you on back in, I think, 2013, and the episode blew up again. Back then, it was like 500,000 views. I love listening to you on Rogan. I love it when you school Rogan about what was that company in China that makes the iPhones, and you're talking about how look, they're clearly working there, so it's a better option than other things. I just like, because you bring a fresh perspective to Joe. I haven't been on Joe's show since 2012. I probably need to get back there. And again, independent media is where it's at. I mean, we've got more subscribers than most of the major papers here in England, and that's important. So we've come a long way in 10 years, that's for sure. Peter, I want to jump in and ask you about inflation, because this is something I think you can bring a lot of clarity to people that are listening, especially some of the kids. And look, I think we're probably about the same age, and I have faint memories of gasoline lines in the 70s and the concept of double-digit inflation. I remember that song by Grandmaster Flash and the Furious Five, where he says, "I got a bum education, double-digit inflation." That was 1982. By the way, Grandmaster Flash was here a few months ago in the studio. But is it different now as we approach a double-digit inflation target than it was, say, back in the 80s? And then how do you explain it to someone who's never experienced anything like double-digit inflation?
Well, first of all, I don't think we're approaching double-digit inflation. I think we're already there. I think that if the government was still reporting inflation the way they reported it in the 1970s, using the same methodology to calculate the CPI, the month-over-month number that we just got, which went from 9.1 to 8.5, I think it would be well north of 15%.
Wow,
so
15. Wow.
Yeah, if we kept score. Remember, back in the 1970s, they didn't use owner's equivalent rent. They used home prices. They used actual rent. Well, year over year, those things are up 15 to 20%, whereas owner's equivalent rent is up like 5.5%. That's a third of the CPI right there. That is dramatically undercounting the cost of shelter. But we also have things like substitution that we didn't have back then. Back in the 70s, the basket never changed. Now, they just keep changing the basket. They take out stuff that went up and they put in stuff that didn't go up as much. So the whole thing is manipulated. So we have double-digit inflation. We're just not being honestly told that we have it. But you go back to those gas lines of the 1970s, that wasn't the result of inflation. Higher gas prices were the result of inflation. The lines and the shortages were the result of price controls and stuff like that, which the government may in fact implement again. But Americans have been living with inflation for over a decade. It's just that the inflation didn't show up in a dramatic way on consumer prices until more recently, because all of the monetary policies that we have pursued since the 2008 financial crisis, it can all be summed up in one word: inflation. Inflation was deliberately created, not only by the Federal Reserve, but by the ECB, by the Bank of England, which, by the way, today actually reported 10.1% year-over-year inflation, and the Bank of Japan. Quantitative easing is simply another word for inflation. What is quantitative easing? Printing money and buying government bonds. That's inflation. Inflation is an expansion of the money supply. That is literally where the word inflation comes from. You get an old Webster dictionary, and you can even find these on the internet, and you see how inflation was defined, and it's defined as an expansion of the money supply. Prices going up are just a result of inflation. But the government really wanted to change the definition of inflation from an expansion of the money supply to an increase in prices, so they can confuse the public as to the source of inflation. Because if the public realizes that inflation is expanding money supply, well, they know exactly who's controlling the money supply. But if they think inflation is rising prices, the government can blame it on the people who are raising prices, greedy businessmen or Putin, right? Or somebody like that. They can point fingers at everybody, but accept responsibility for themselves. So the government has created the inflation. And by the way, the Inflation Reduction Act will result in even more inflation being created by the government. The difference is that for years and years and years, the inflation that entered the economy predominantly affected asset prices. So why did stock prices go way up? Inflation. Why did real estate prices go way up? Inflation. Why did bond prices go way up? Inflation. Why did the price of, antique cars or, art, why did everything go up in price? Inflation. Why did cryptocurrencies go up in flight? Inflation. The Fed inflated these massive asset bubbles with all the money that it created. But as I was warning, going back to day one, when they first did quantitative easing, when they did QE for the first time, they didn't call it QE1 until they had QE2. But when they did the first QE, I said that there would be a QE2. I said there would be a QE3. I said back then that we would have more QEs than Rocky movies. We've now had 4. QE5 is coming up. That's how many Rocky movies we had. But the reason I knew the government would keep repeating it is because I knew it wouldn't work. All they would do is blow air back into a bubble, and then every time the air started seeping out, they would want to blow more back in, because QE doesn't solve the problem, it exacerbates the problem. But now the problem is that all that monetary inflation has now worked its way through financial assets, and it has ended up where I always knew it would, in goods prices, consumer goods, producer goods, and this is where it's going to stay. And if the Federal Reserve goes back to QE again, which I think it will, because we're already in a recession and they're going to try to stimulate the economy at some point, especially when we really start hemorrhaging jobs again, when they go back to QE, it's not going to look anything like the previous doses. We're going to have an explosion in consumer prices because inflation is already well above their so-called 2% target. And if the Fed throws gasoline on this fire, even with inflation 3 or 4 times its ceiling, the markets are going to react very differently. I think we're going to have a crisis in the dollar. I think the dollar is going to crash. And I think bond prices are going to soar. It's going to be a sovereign debt crisis. And so it's going to look a lot different than what we've experienced in the past decade or so.
So did they always knew this would ultimately trickle down into goods prices? And then was it going to be easier to explain it because it's the businessmen, it's the war, it's the famine? Or was this a little unintended that this was going to happen so quick? Or was this always something that they expected it to pass through?
Well, I don't know. I mean, I'm sure there are some people somewhere in government or at the Fed that knew this and just lied about it. But I'm sure there's so many incompetent people there that no, they didn't expect it. They are so clueless about economics, about inflation. And so they're just surprised. But the whole purpose of the policy that we've pursued, it's just kicking the can down the road. We've got this huge problem and we don't want to deal with it. Why does no politician want to deal with it? Because it means if they deal with it, they might not get reelected. Because you don't get reelected by being the bearer of bad news, right? There's an old saying, don't shoot the messenger, right? So nobody incumbent, no politician, no central banker wants to level with voters about how bad things are and what they actually need to do in order to correct the problem. What they want to do is kick that can down the road because then they can get past the next election. And so that's all we've been doing. But every time we do that, we make the problems that everybody is afraid to deal with even worse. And now they're even more afraid to deal with them because the consequences of doing it are even worse. So again, the can keeps getting kicked. But at some point, you run out of road, right? Or the can is simply too large and you can't kick it anymore. And, we got to be there. We got a $9 trillion Fed balance sheet. We got almost 31 trillion in national debt. We've flooded the economy with money, and we've really kicked it into a higher gear with COVID, when we had the worst combination of monetary and fiscal policy I've ever seen. And I called out the Fed in Congress in March of 2020 for the asinine policy response to COVID. They, on the one hand, they ordered businesses to shut down and workers to stay home. So they ordered a big reduction in supply. At the same time, they flooded the economy with cash to increase demand. In fact, they were dumb enough to send checks to people who were no longer working that were 2 or 3 times as large as the money they earned when they were working. So we had less supply, we had tremendous demand, and of course, prices went straight up, the opposite of what they should have done. The government should have cut spending during COVID. This Federal Reserve should have shrunk the money supply. If we were going to stop production, which was a mistake, I never believed we should have shut down the economy. I think it was an overreaction to the COVID. But if we were going to do that, if we really thought it was necessary to shut everything down and everybody stay home, then we also needed people to stop spending. We couldn't give people money to buy stuff when nobody was making stuff. We had to have a more serious recession than the one we had. But again, the politicians didn't want that. They wanted people to keep spending even though they weren't working. And, the consequences were obvious to me. It's just amazing that so many other people in government, couldn't see it, or even in the private sector.
I think I've asked you this before, and I'm going to ask you again, Peter. If I could put you in to the Oval Office for the next 4 years and say, guess what? Let's bite the bullet. Let's clear all this out and clean all this out. What would the economy look like for 4 years in the U.S. and globally? How much pain, and then what would the consequences be for the American public to get this right, to set things straight?
It would be a combination of pain and relief. Okay. So, it wouldn't just be all pain. And I don't know exactly how long it would take to play out. Remember, we have so many malinvestments. The misallocation of resources is so great. We've made so many mistakes that obviously unraveling this mess isn't going to be easy. Asset prices are going to collapse. Companies are going to default. Investors are going to lose money. There's no way around that. It's just impossible to avoid that. A lot of jobs are going to be lost. Now, a lot of jobs are going to be gained too, but jobs are going to be lost. We have to lose the wrong jobs to create the right jobs. If people are employed in areas where they shouldn't be, that labor needs to be freed up to be reallocated to where it needs to be. Now, interest rates have to be much higher. Now, what does that mean? A lot of defaults, a lot of bankruptcies. But of course, it's going to encourage savings, which will finance capital investment again. The economy will repair. The government is going to have to slash government spending. So obviously, if you're dependent on that spending, it's not good for you. If you used to get a big check from the government and now you get a much smaller check, or you get no check at all, that's going to be a big deal. I think doing the right thing is going to require substantial cuts to Social Security. So a lot of people are not prepared for that, but that has to happen. Now, if we don't do that, then the Social Security benefits are going to be worthless anyway, because inflation is going to destroy them. So I think, a measured approach to cutting in Social Security and maybe means testing it is much better than just wiping out everybody's benefits equally through inflation. So we're going to go through pain one way or another. At least the pain that we would go through with me, calling the shots, would be constructive pain. It would be pain that would eventually lead to gain. But the course we're on now is just going to be pain followed by even greater pain. So right. We need to do the right thing. And if we could make government much smaller and we could eliminate a lot of the government, I would like to liberate the people from having to pay the income tax. I don't want any personal income tax. I don't want any corporate income tax. I don't want people to have to waste money and time calculating the income tax and keeping track of it. I don't want people rearranging their affairs, or spending time trying to avoid taxes. I want them spending their time and their resources trying to generate income, not try to shield it from taxation. We need to go back to taxing consumption. We need a tax system that taxes people when they spend their money, not when they earn their money. That's what the country was founded upon. That was a basic principle that existed until 1913. And I want to go back to that. And that would be a major boom for the U.S. economy. And of course, if I was president, there are so many regulations that I could eliminate with the stroke of the pen that would immediately free up a capital and allow for American business to be much more efficient and much more productive. And money wasn't wasted on complying with all these ridiculous regulations. That money could then be used productively in the real economy. So look, I think capitalism.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.